welcome back to Katie's Business Tips. Here to talk to you today about buying an existing business. Now this is different than starting your own business. We're talking about buying an existing business. Now you may buy shares of a corporation is one way to do it. You might buy the name and the assets of the business is another way to do it. So there's various ways to maybe buy the business, but either way, when you buy a business, it's different than starting your own. You're buying an existing business that's already operational. And when you buy those assets, it's very important you know what assets you're getting. It must be spelled out in the agreement. You must know, am I buying the shares? Because if I'm buying the shares, I need to know that. There's complications potentially with that, and there's also benefits and drawbacks to that. If I'm just getting the name and the name and the assets, that's another thing. Maybe you're also getting client lists and it's goodwill, of clients that build up relationships already. You must know what you're getting when you're buying the business, and it must be listed out in the agreement with the seller when you're the purchaser so that both parties are very clear, first of all, on what you're getting, but second of all, from tax purposes, you need to know what's going on. And to be honest with you, if you're considering buying an existing business, you need to talk to an accountant. We'd love to hear from you because there's strategic ways to do it to save both you and the seller tax or to offset things and make it a simpler deal that could benefit you in the future. Okay, so very important. Now, if you are buying the shares of a corporation, then that is exempt in many cases to the seller. And you must consider that when you're negotiating the purchase of an existing business. Because if the seller is selling his shares to you or his or her shares to you, they're getting usually a capital gains exemption. It's called a small business capital gains exemption. And that capital gains exemption is a lifetime exemption that people have on selling small business shares. Also for farming property and fishing property, the other two. But we're talking about shares here. And at the end of the day, because they're not going to pay any tax or pay less tax or maybe no tax, like I said, there's a benefit for them, and that could be dealt with in the part of your negotiation. Again, if you're taking over a corporation, it's different than taking over the assets. If you're taking over the corporation, you're also taking over the responsibility for that corporation versus starting maybe a new corporation. Benefits and drawbacks. So very, very important that you discuss that, you get it in writing, you know what you're getting, and you discuss it with a professional advisor like us, like an accountant, that can advise you properly. If you got any questions about buying an existing business or anything at all in these areas, we'd love to hear from you. Thanks, and we'll see you in the next video.